Hey traders, Raghee here, and in this update we're going to revisit crude. So if you did not see the previous update where we talked about buying crude, I'm sure a lot of you who did catch that said, okay Rag, what now? What a crazy candle. What caused it? What do I do now? And what does this new lower low mean? So let's start like we always do with structure first, strategy second. And yes, today we have a yellow over yellow. But remember that one day of yellow over yellow, A, is not bearish per se, and B simply means we have a more neutral market. You can see the blue grab candle here as well. But we will still trust and use the momentum that preceded this lower low. Now, the bigger question is this high up here, this low down here, this crazy outside range day, which means that today's range was wider than the range that preceded it. What gives? This is OPEC. So what was anticipated, and the reason for the fade, and I'm in long crude, so know this. Yesterday we sold off, and I told everybody, let's keep this at an aggro entry. Why? Because it allows us to control risk rather than scaling in, just backing the truck up and getting long. We wanted to wait to see, well, what if we get a lower low? Well, the reason that the market sold off yesterday was at that time the anticipated output production from the OPEC meeting that happened today, Thursday. Well, the meeting happened and the 400,000 barrel per day increase, as expected, was announced. And the market was extremely volatile. Let's let the market digest OPEC for a moment, because now we have questions about demand, now we have questions about supply, and clearly both bulls and bears ran the gambit, a higher high and a lower low. But when all is said and done, we still have a very neutral market, a very fresh neutral market following a prolonged period of an uptrend, only a blue neutral grab candle, and now we can start to scale in at the moderate and the conservative level. So remember, by only scaling in at the aggro, we had a smaller size, and with that smaller size comes less risk. We still, though, have allocated budget to take advantage of the moderate and conservative level. That's the value of scaling in. So yes, the market is still, I believe, an intact bullish market. We know why the volatility came. Thank you, OPEC. Now shut up so we can get back to moving higher. And yes, I do believe we're going to continue to move higher, because when you look at probability, we can assume that weakness is always going to be a catalyst for a reversal, or we can think about the higher probability, which is a continuation. And that's exactly what we're going to look for. As long as this market stays above about 78, and you can see there about 77, 75, we have a nice volume ledge, I will remain a bull. So that's what today's move means to me. It's more opportunity. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.